We don't go after car manufacturers when people get a DUI. If you created a tool that is used by and large for legal purposes across the board, and you look at the rate of illicit use of cryptocurrency, about exactly the same as traditional finance, maybe even less, you shouldn't be held liable for somebody misusing your product.
Andrew Johnson is a policy expert at Centerpoint 360, advising companies on navigating healthcare, fintech, and blockchain regulation.
He brings first-hand experience with policymakers and insight into how emerging tech can transform the government.
I think there is a very real question of, does the U.S. accumulating a Bitcoin reserve as a hedge against the dollar undermine the dollar?
We're not spending a whole lot of dollars that we have to purchase Bitcoin. We're largely committing to keeping the Bitcoin that we have and not selling it off.
You have EOs that happen beginning of the year, stuff that's being pushed through Congress, regulatory agencies, and they're changing internal policy. Is it really a year's thing, or is there kind of a rush to the market?
Nobody has ever voted for somebody because they were anti-crypto, but there were a lot of people who voted for President Trump because he was viewed as the pro-crypto candidate.
You're embracing the crypto industry and you're embracing Bitcoin, and then you also believe in continuing to export US dollar dominance as the reserve currency.
The place we're getting to, it's going to take time to build up. Bitcoin is a valuable asset, and we shouldn't sell that asset. We should hold on to it because we believe it is an appreciating asset.
A lot of the financial infrastructure itself that the government uses is sitting on 1970s mainframes. And so is there anything that's going to transform the internal operations of the government?
The US's financial system was a product of decades upon decades of lessons learned. That's why I think what we'll see is...
What is up, everyone? Welcome back to another episode of Redefined. I'm here, your co-host, Jeremy Almond, along my awesome friend and co-host, Megan Guy. Megan, how are you doing today?
It has been a week, Jeremy. It's been quite a week. Full disclosure to pod listeners, I may have to jump in and out of this one a little bit because I am in the middle of, we talk about crypto grifters and how they're bringing down the whole DeFi story. And I'm in the middle of a little bit of grift myself. I had a robbery this week, and in real time, or kind of coordinating with the police on trying to get my stuff back because the thief has surfaced. So stay tuned for the cliffhanger at the end of the episode. But apologies if I'm a little bit distracted. It's...
Because you might be running a sting operation, like real time in your house.
Yes, exactly.
So everybody's going to say hi to the FBI, if we have to. So
yes, top secret. If the VC thing doesn't work out, I'll go pursue spycraft somewhere with all this experience that I'm gaining. So.
Well, I guess that's a natural segue. So we have a really interesting guest right now, which I don't think is a spy or connected to the three-letter agencies, but does have some interactions with the government, right, Megan?
Absolutely. Very excited to have you, Andrew.
Yeah, it's great to be here. And for what it's worth, my parents don't really know what my job is, and they're kind of convinced I'm either in the FBI or CIA. So just full disclosure there.
Yeah, I don't think mine do either.
Well, we're really excited. I've gotten to know Andrew for over a bit of a time now. Andrew is one of, I think, the foremost experts on policy making around Bitcoin and crypto and blockchain in the United States. He's one of the leaders at a firm called Centerpoint. And so we're going to get into, I think, a really interesting discussion around how is policy making changing in the United States. And a lot of things are happening kind of behind the curtain and in the halls. And so not all of us are in DC every day, hearing about what's going on at both the federal and state level. And so we're really excited to have you here, Andrew, to kind of talk about how that's all done.
Yeah, it's great to be here. And I think, Jeremy, your comments are probably a little too generous. But I do spend a lot of time in the crypto space and love every bit of it. It's an interesting challenge in that it's such a new space and industry. And as policymakers really start to take a look at it, there's a lot of education that we found just needs to happen. People are still skeptical of the industry to a certain extent. And we just have a blast getting to educate them, making sure they know about the industry, its benefits to the country, to their constituents. So I think it's a very exciting time in the industry, and great to see that a lot of people, bipartisan, are embracing it right now.
Yeah. And, I think there's at least for me, there's two kind of groups of people, generally ones that are on the, kind of knife's edge of what's happening in DC around the policy making. So if you're in fintech or if you're in Bitcoin or if you're in kind of broader blockchain and crypto, these things very much affected your business, or your professional interests for the last few years. But for the kind of broader set of people, we have a lot of people in our audience that are, just business leaders, capital allocators. It might not be clear what has changed over the last few years. So maybe to kind of start off, I'd love you to kind of give a perspective of, the last few years, which was really, perhaps regulation through enforcement, right? And what was that like? And what did that mean, for how do good actors in the Bitcoin and blockchain space think about things? And then now, obviously, a lot has changed. And at least for me, we saw a big shift in sort of the Overton window, maybe, sometime last year. So going to 2025, we're in a wildly different scenario. So how do you think about it with folks that are actually in office that you talk to every day?
Yeah, so I think it's kind of fascinating. And, it's probably even more than the past 4 years. I kind of go back to the New York bit license, which I think was 2012, 2014. It was a very new industry that most people hadn't even heard of at that point. And, New York, I think, is a very proactive regulatory state, which I don't necessarily think is a bad thing in itself. But they were very early on, right? They're enforcers of a lot of financial regulation, given the finance industry there. So it made sense for them to look at this, a new financial industry very early on. But I would say it probably constrained a bit of crypto innovation and investment, particularly within the state. So, I think you go back to there. And then, like you mentioned, the past 4 years, this idea of regulation by enforcement. And oftentimes, I think it's a crazy thing just in my world of dealing with regulators and policymakers of oftentimes there's a conversation before on what a company may be doing, and how regulators view those particular actions. And I think when you have those types of conversations, you learn, hey, maybe we actually do need to adjust on this, or hey, here's why we're doing this, and here's why we don't think it's running afoul of any current regulations, and we'd be happy to talk to you about a regulatory regime. But I think the previous 4 years, it was probably from an innovation standpoint and really from a regulatory standpoint, probably not the best way to enable innovation in the space. And that may or may not have been the goal. But I think what we're seeing now is a completely different view on how crypto works, on what it can do for our country. And I know we'll get into that a little bit later, but I do want to talk about, it was a recent development. Todd Blanc, who's at the Department of Justice, came out with a memo where the US DOJ had been investigating companies for not complying with kind of general financial regulations, not really in the DOJ's oversight. So with the Blanc memo, essentially what they've decided is the DOJ is not going to prosecute companies who are not behaving criminally. I think a company like FTX, right, that would still be a part of the DOJ's oversight. But a company who comes up with a new product that the DOJ may have a different opinion on as to whether or not it's a legal financial instrument or not, they're going to leave that up to the people who have regulatory enforcement over that, which is the CFTC and SEC. So I think it's an exciting time, and it's going to allow companies to innovate much better without the fear of, hey, we're operating, we've got a nice business going, we're helping a lot of people, and then all of a sudden we're being sued by the DOJ and can't operate anymore. So it creates a lot more certainty and creates the ability for crypto companies to engage with the actual regulators and to have a little bit better idea of who their regulators are.
Yeah, we actually went through this with one of our portfolio companies. And it was exactly as you described. They did multiple trips to DC to meet with various regulators and agencies and try and understand and make sure that what they were doing, fit within the scheme of what people thought was fair and legal. At that time, the intent was nothing but good. And got surprised, a year or so ago with one of these Wells notices. And it's been a huge relief to have this now come out and lift from them. And it's, obviously opened up a lot more conversations. And like you said, with companies like FTX and the bad actors, like, of course, there should be enforcement against those. But I think it's not something I've really seen much in my career, where you have a lot of companies and innovation wanting to do things by the book and by the rules, and the book doesn't exist, and no one's willing to kind of sit down and help write it or be the editor, right? So yeah, the clarity, I think, is going to be super helpful. I think we've already started to see in the markets, but I think even with sort of innovation and new companies coming out with ideas, I think there's going to be a lot more in the wake of having some of this regulatory certainty.
Completely. And I think kind of, there hasn't been a ton of media around this memo. Obviously, there's been some in kind of crypto specific publications. But one thing that kind of has been
there's some splashier crypto things happening in the world.
Well, as somebody who works a lot in the regulatory space, it's something I've been a lot more excited about. But I think one of the things that's probably getting misinterpreted is, companies who are specifically using tools to commit crimes will continue to have action taken against them. The law is going to continue to be enforced. It's more on the companies who are building different tools, innovative, where some bad actor may use that as a tool to commit a crime. But it's the same equivalent of, we don't go after car manufacturers when people get a DUI. And I think that's the new approach that this administration is taking, of if you created a tool that is used by and large for legal purposes across the board, right? And you look at like the rate of illicit use of cryptocurrency, it's very low, really about exactly the same as traditional finance, maybe even less. The admin is taking the approach that you shouldn't be held liable for somebody misusing your product. And they're reallocating their resources to go after the people who are misusing those products, whether that's human trafficking, narcotics, weapons trafficking, different things like that.
Yeah, so I think one of the things that's like such a refreshing or great change is, a lot of what I would consider people who are good, honest actors trying to build great businesses, a lot of that was going offshore. Because they just didn't know, like the lack of clarity, whether it was with the SEC or the DOJ or with the Banking and Finance Committee, like all of it was made it so difficult that a lot of my peers I knew were just like, we don't know how to bring these products to bear in America. And so I think bringing them back into the U.S. and the largest financial market in the world is a big sign, and you're seeing that and what it's doing to the markets. One of the things I think that's nuanced when you're saying not everybody's following this, the policy change, and there's these splashy headlines, but actually it's on a bunch of dimensions, right? And Andrew, maybe it might be useful to kind of break some of those dimensions down, because there's everything from the executive orders to changes in what's going through bills in Congress to how the SEC actually rethinks what their sort of position is, to the regulators that actually regulate the banks, which could potentially hold crypto now on behalf of custody for their customers. These are all changes in lots of different dimensions, and at the state level as well, right? So like, kind of how do you think about each one of the policy like makers and actors? Where do those live, right? And which ones do you think have sort of bigger impact for the business community and this industry as a whole?
So yeah, that's a lot to dive into. I think kind of the broad trend I would probably say is, right, like crypto it's a mature industry now, right? There are a lot of people employed in the industry across the country. There's a lot of capital investment across the country. So, like any mature industry, there are going to be a lot of stakeholders at the government level that people are having to interact with. And I think it's good that they know who they're interacting with on what instances, what products, what offerings. But I really think like it's this idea that, crypto has kind of gone from this nascent industry of, a lot of people who were either computer nerds
Ouch! Sorry, man. I'm not going to name who, but I literally was with some people in the administration, like on a trip internationally, and they were talking about Bitcoin, and kind of its uses at the nation state level. And at some point, one of them pointed to me and said, well, we don't know totally how the actual details work, but the nerd in the room does. And they pointed at me, and I was like, I don't know if you should be pointing at me right now. Like, I don't know if I'm flattered, if I'm like...
Jeremy, you're way too cool. I wasn't talking about you.
Okay. Now I feel much better, Andrew. Thank you.
No, but it has become an actual business with, like any business, right? A lot of lawyers involved, salespeople across the board. Like it's a real industry now. So I think that's kind of where it's exciting, and it's being treated as such, right? I think you've gone from this like very libertarian ethos early on, which I think was probably vital to the building of the industry, right? Like this kind of rebellious countercultural side, where now it has become its own thing. And like, that is so exciting. And it's been really cool to kind of follow over the past, 10 years. I think about the documentary, I'm blanking on the name of it, but it was like one of the early documentaries on Bitcoin, and it follows people, at the early Bitcoin exchange they had right by the New York Stock Exchange. And it was kind of an interesting crew of characters as Bitcoin was. And, now you go to a Bitcoin conference and you still have like a lot of those people, but you've got a lot of like kind of people who 10 years ago would have never been involved in cryptocurrency and now are building very exciting, cool businesses around it.
Jeremy is so bummed to hear that he is no longer a countercultural revolutionary, but you're basic, my friend.
The white paper is still here. It's still underlying it. I will say, like, I was with one of the larger conference organizers recently, and they're like, the suits have come. The suits have come. And I was like, okay, that's fair. Like, this is a wide tent. It's a wide tent. I think one of the areas where you were saying there's many actors, and you as somebody who spends a lot of time with the policymakers, like, how do you think about the federal side versus the state side, right? Because you do a fair bit, within your organization on the state regulatory side as well. So like, do states play a role in this process, or is this largely like a national and federal only regulatory issue?
So I think states play a much larger process than a lot of people would assume. Largely state attorneys general have a lot of authority over different things, broadly with the crypto space as it applies to consumer protection. So they've taken a pretty strong interest in this, and actually were very early into at least educating themselves on the space. I think as with any new industry, there's a lot to figure out, and crypto is, kind of complicated. At times it takes people a little while to understand. I think they probably all should zoom in on the white paper in your background and figure it out. I think Jeremy has actually changed the color of the white paper, because I'm convinced the other day it was a different color.
It was a black paper. You're right.
There's a black paper and a white paper. Both of them say
yes, one in every room.
There are a few in the offices, and the words all say the same thing for what it's worth. It's like the Constitution. It lives in history forever.
There we go. So, I think like from a consumer protection lens, there is a lot of oversight. And then, I think about like the mining side of the industry. Obviously, from an energy consumption perspective, I think what you're seeing now is a lot of states heavily investing in energy infrastructure. They've recognized a need for it. And, it's interesting. We actually spend a lot of time working with governors on different issues. And one of the things that I was most fascinated to hear on big economic development projects, and this is like a car manufacturing facility coming in, is, two questions that I always get a different order of what the two questions are, but it's always the same two. And it's, do you have enough energy for me to build what I need to build? And do you have enough workers who can help me do that? And, I think with the rise of AI, which I know we're going to talk a little bit about, the importance of data centers has come up, and, you're getting some pushback in different areas where there's a heavy build out of that, concerns over rising energy costs. As demand increases, supply has to as well, to make up for that. So I think states are looking very strongly at how to make sure that their residents, first and foremost, energy prices don't go up as they continue to invest in critical infrastructure, and whether that critical infrastructure is a manufacturing facility, a data center, for AI, or crypto mining facilities. And I know there's been a lot of really smart people across the board working in the crypto mining space who are really trying to do things the right way and make sure that they fit into the community that they're in. But I think those are probably the two really big areas where states do have the most oversight, and where I think there are honestly opportunities to engage and make sure that as companies are building key products and new solutions, that they're able to do it the right way and to know what the regulatory framework is going to be. You're going to have, from a regulation perspective, an oversight perspective, the attorney general of a very left-leaning state may have a very different view than one of a very right-leaning state on what actually constitutes consumer protection. It's by and large a very bipartisan issue. That I think you have a few cases where all 50 states, Republicans, Democrats, come together on an issue, but then there's also some divergence. So I think it'll be interesting to see how those regulators at the state level approach some of these new ideas. And I think by and large in DC, crypto is still very bipartisan. We've seen that with the Genius Act. I think at the state level, it's bipartisan as well, but there's just probably been a little bit less work on education across the board. I think there's a tremendous opportunity to educate both sides of the aisle on what the crypto industry is able to do for the constituents and voters for many elected officials.
100%. I think one of the things you just covered that I want to double click on is energy policy, because and this is an area I know Megan's really passionate about, which is a lot of the stats I've seen is energy abundance is like directly correlated to standard of living. So as energy output increases, GDP increases, and then standard of living increases. And if you look at a bunch of societies, they're very directly correlated. And so, how do you think about just energy policy in general, which Bitcoin mining and just the overall blockchain industry is a big consumer of? How does the capital markets there drive energy policy, energy requirements, energy use? AI is obviously another, big user of it. And what do you expect both the state regulators to do there? Where do you expect the large, CapEx investments, whether it's in, nuclear or clean energy? How do you expect that to evolve? Because I think that's one of the areas I know that a lot of the governors, to your point, have divergent views on how that happens. But there's kind of a race to, sort of more energy surplus and energy, markets in the US.
I think there's a part to this of if you think about kind of the past 30 years, there was a lot of focus on reducing the consumption, right? And that's through more efficient appliances and different things like that. And not necessarily so much on increasing production. And I understand, kind of 30 years ago, right, the increased production of coal, why people would think maybe that could be problematic. But I think now we're kind of at a place where nuclear is, and I think Megan would be very happy about that, that nuclear, we're having a lot of great breakthroughs on nuclear energy. And I mean, as you think about increased energy consumption leading to increased GDP, I mean, what nuclear can unlock, and right, we've got this bountiful source, and I mean, hopefully we can build it at scale where it becomes efficient. There's businesses, who are competing against each other, driving down the cost and finding efficiencies there in a safe way, where I think we're going to unlock a lot of potential and a lot of capacity for the AI data centers, for crypto mining, for manufacturing facilities. And I think you do have a bipartisan approach to, hey, we need to actually figure out how to invest in increasing our energy production. And, I think you'll have a lot of states battling it out as to whose way of investing in that and bringing in the capital of whether that's, building solar panels, wind farms, modular nuclear reactors, different things like that, where they're going to compete against each other. And as I mentioned before, the two questions, do you have the energy? Do you have the workers? they're going to be competing to have the energy so that they can bring in these industries, right? And, as you think about that, it obviously increases the wealth of each state, which is, going to be a key policy goal for just about everybody, of making sure that the citizens and residents of their state can, earn a great living, doing whatever jobs, come along with that. And I think we're going to see a very big difference in what types of jobs there are in the next 10 years. But yeah, I would say that there's a lot of competition in that space.
Yeah. And one of the things I think is interesting there is, like, at the national level, there seems to be a slightly lighter touch to allow the states to then compete. And I think what's not obvious is different states are going to compete with different sets of resources and different sets of expertise, right? So, in one state that has obviously much more sun, you're going to see a lot more solar output. We tend to, in my day job, work with a lot of solar customers or, clean energy customers there. In other states, the natural gas, the innovations that's happened there has just been massive. We have the second largest natural gas plant, I think, in the world that just recently came online. And then you have, I think, other states who are willing to take, bigger CapEx bets on, nuclear, or particularly not modular nuclear, right, as a different way to be able to create abundance. And so this is really interesting, because I don't think it's been quite some time where we've had something so impactful to both, like, industry, and in our case, Bitcoin and the crypto industry, but also kind of wider human flourishing and abundance, and letting the states actually compete on actual market prices is super fascinating. So, like, how do you see that behind the scenes playing out, Andrew? Like, is that, governor leadership? Is that regulatory sort of change? Like, what's happening at the state level? Because, they often say, we vote a lot of times and think about at the national level, but a lot of the biggest changes actually happen, at the grassroots, at the local level.
Yeah, completely. And it's really like an all of the above approach, right? Like, you have to have a strong federal energy policy that, incentivizes investment within the country and within the states. I think one of the interesting things I was looking into a few months back is there's been, like, very little investment in transmission across the state. So as we've got all of these, like, great projects across the country, whether that's solar, wind, whatever it is, harvesting natural resources, oftentimes renewable resources, but they can't actually get to the location of the consumption. And it's largely due to a lack of investment. So I think over the course of, the next 4 years, and I would hope, the next 20, 25 years, we're going to look at rebuilding that to make sure that where energy is produced doesn't necessarily have to be where it's consumed. And I think that's going to allow other states, right? So a state like, Oregon, who may not have much solar, they can actually harvest the solar that comes from Arizona. And as long as the transmission lines are built where they can where the energy can get there. So I think we're going to see a lot of that, but right, that's interstate. The transmission lines are moving across states, so it requires a clear regulatory framework, much of what we're talking about with crypto, of enabling states to be creative in how they invest without so much regulatory oversight, and allowing the regulatory piece to enable collaboration with different states.
Maybe one other question for you, I guess, while we're on the topic of state policy, something that we've seen pop up in a few places are these notions of strategic state level Bitcoin reserves. And Andrew, maybe you can kind of just talk a little bit, help our listeners understand, like, what does that mean, and why would a state want that? Why would the federal government want that? And how are those entities, I guess, thinking about using and building those out today?
Yeah, so it's interesting. I think right now we've got 2 that have been signed into law, and 1 that is on the way in Texas, and should be up and running shortly. So, and each state is doing it in a different way, right? Bitcoin has obviously been a tremendous asset over the past 10 years. So I think a lot of that, what you're seeing is, hey, states invest money in all sorts of things, whether it's on behalf of their pension, and there's different pensions for different places. So some of these laws, right, one may allow the teacher's pension to invest in it, but no other pension funds. So they're going to be very different. But I think what we're also seeing is just a willingness to embrace the industry, as opposed to just, hey, this is an asset. Go ahead.
It's a little different though, right? Than just saying sort of states invest in different things. Like, we're not talking about, the state treasury being managed across a portfolio of assets where you're trading in and out of, commodities versus equities and things like that. This is actually like putting it on the balance sheet uniquely, which I haven't seen with other assets. I don't think, correct me if I'm wrong, because I'm not an expert here, but I don't think like states have their own gold assets, right? Like they rely on Fort Knox, and that's at the federal level. So what's different here?
Yeah. Well, I think it's largely just an embrace of the industry, and it's a way to be pro crypto. I would say it's largely symbolic. I do think it is a great performing asset that a lot of people want to hold, and it's frankly a way to diversify an asset or to diversify your asset base. But I also do think it is the new gold. So it just kind of makes sense to have on the balance sheet as you're looking at growing a portfolio and keeping a stable cash reserve. Why wouldn't you have a little bit of Bitcoin in it as well? So I think there's like it's a very interesting dynamic, just because I think a lot of it does actually focus around the asset price as opposed to, kind of functionality of crypto in general. There's a kind of interest, Chris Dixon, who wrote Read, Write, Own. One of the things he talks about is kind of the casino versus the computer. And I think this is, I don't want to say this is the casino because it's not, but you have like two spaces within the industry where it's, I'm going to buy these assets and hope they go up, versus I'm going to build something that is going to provide great use to, society as a whole, right? Jeremy, like what you're doing that's like very much the computer side of this debate where, and I think it's okay to buy an appreciating asset, right? State pension funds are invested in a lot of different things. They're invested in private equity funds. They're invested in the S&P 500. So it makes sense there. But this is more about creating a way for their asset values to go up than anything.
Yeah, I think one of the things, and maybe it's easier to talk about at the national level, and then you can kind of go back down to the state level. Is it's I think causing a forcing of innovation happening, on the balance sheet of the U.S. government that hasn't been done in a very long time, right? So unlike a lot of places in other rich countries in the world that have a sovereign reserve that or sovereign fund, that folks like the VCs that Megan spends a lot of time with go work with, right? The U.S. didn't. We didn't, other than maybe our strategic reserve around oil, we didn't overly think about our strategic assets on the balance sheet, as a nation, right? That the citizens are the owners. And so all of a sudden it's really fascinating because to me, it's causing the government to really think about what are the strategic assets that are owned on behalf of its citizenry. And when you look at, whether it's El Salvador or I think the Bhutan story is the most interesting one, actually. So, those guys have been mining for years now. They have now one of the largest strategic reserves of Bitcoin in the world, and it's a largely happy and peaceful country. And so when you listen to them, they look at it like, hey, we've got these natural resources, in their case, the ability to mine nationally. And then they believe that, hey, this is a productive asset on behalf of the citizenry. There's places in, Nordic in the EU that are kind of similar, that they think about their sovereign wealth fund. So I think it's creating, I would say, unlike maybe the crypto industry of number go up in casinos, this is actually causing a deeper question, which is for the government, what is the strategic reserve and what is the strategic balance sheet and what is our gold reserves and where does Bitcoin play? And again, that's a wild thought that we haven't done as a society. So, I'm all for at least the intellectual question.
Yeah, I agree with you on the intellectual question. I think the big difference between the US and those examples that you went through is we have the world's reserve currency. And so I think there is a very real question of, does the US accumulating a Bitcoin reserve as a hedge against the dollar undermine the dollar? Like, we're in a moment when people are very concerned about prices going up, about inflation. Like, that was what effectively the last election was decided on. And, this arguably makes things quite a bit worse, or sends a signal that the US itself isn't confident in the strength of the dollar. And I don't know, to me, that's problematic. Like, I love the conversation about innovation and taking a new look at what we've been doing for the last 100 years, but I'm not entirely sure that this was as well thought through as it would be if you were executing it, Jeremy.
Yeah, maybe Andrew, you could give the view of actually what the execution path is. So like the EO, these are kind of like nuanced things, right? So like, an executive order went out about the strategic Bitcoin reserve. There is, talk with Senator Loomis and others on the Hill about it. So like, what are kind of like the details around, how we're looking at it at the federal level, and then the state levels are obviously moving a little bit faster, but like, how are they thinking about it? How are the policymakers themselves writing the docs? Because oftentimes, it's the folks that work for these people that are actually writing, the policies themselves. So like, what's happening behind the scenes in it?
Yeah, so I think it's interesting, right? Because the executive order on the U.S. strategic Bitcoin reserve, right? It's budget neutral. It doesn't. We're not spending a whole lot of dollars that we have to purchase Bitcoin. We're largely committing to keeping the Bitcoin that we have and not selling it off. There's been over the years a lot of Bitcoin that has been sold off, whether it was seized, due to criminal issues, and that's happening right at the federal, state, and local levels. There are a lot of people with businesses on this and helping states and different governments to sell off digital assets that they may have seized due to illicit activity. So I think it's more of a commitment to what we have when we are holding Bitcoin, largely Bitcoin, is a valuable asset, and we shouldn't sell that asset off, to fund a short-term project or, long-term recurring expenses. We should hold on to it because we believe it is an appreciating asset. Megan, I think your point on kind of the U.S. as reserve currency for the world, I don't want to say I disagree, because I completely understand where you're coming from. But I do think, and if you look at what Senator Haggerty, who was one of the co-sponsors of the Genius Act, said was the Genius Act is going to cement the U.S.'s place as the world's reserve currency because of our ability to create stable coins, largely around U.S. dollars, backed by cryptocurrency. So I think it's more, and right, this has been like a big switch from like the cypherpunk days of early crypto of it's going to replace the dollar. I think really the idea is it's going to enable the dollar to really become even more widely used as the reserve currency, and used with it's going to be easier to use in cross country transactions. And Jeremy, I know you can certainly speak to a lot of that and the way that it improves efficiencies, improves our ability to manufacture here, improves our ability to bring in the right raw materials, different things like that. So I don't necessarily see it as a threat to our reserve currency, or even the intention, the mistake of weakening us as the reserve currency. I think a lot of this was very deliberate and thought through. It's just a little bit different than like the early days of crypto and what the view was going to be as to what Bitcoin would do around the financial system.
Yeah, it's people can argue whether they think it's the right call or not, but it seems to me there is a view that it's actually both. So they want to export U.S. dollars and they want to increase what they consider hard assets. So, if you might consider a basket of hard assets, gold and maybe our oil reserves, a petrodollar. So their view is that, they're going to increase and hold as much hard assets as they can. And then they're going to export U.S. dollars, U.S. dollar dominance as much as possible. So I think maybe that's a good segue into the Genius Act and what's going on in stablecoins. So like,
Jeremy loves stablecoins more than anything. So I'm very excited he's raised this topic.
Yeah, I think what's fascinating is like, now what's an emerging view, right? Is like, is Bitcoin an asset? And then what is stablecoins relative to US dollar export, right? So when you listen to a lot of the policymakers, it seems to me, they're looking at it as an opportunity to increase US treasuries. So like, Andrew, how do you think about, what the intention behind the Genius Act is from the regulators and the policymakers, and particularly around, US government debt, US treasuries, bonds, et cetera, and what that does to the bond market? Because a lot of people in the capital markets are watching that really closely.
Yeah. So, I think it largely just enables us to better be the world's reserve currency, like I talked about, and like Senator Haggerty talked about, who happens to be my senator in the state of Tennessee. As far as what it means for the bond markets, does anybody actually know, right? Like, does anybody have, I think we'll see, right? And we'll see what adoption looks like globally. And, whether it accelerates like a lot of people assume it should, but I think a lot of this is a wait and see. And I don't necessarily think the effects are going to be overly negative. But I think it largely just depends on how well stable coins are adopted across the world. And what the use actually becomes, and I think that probably takes more than the next 12 months or even 24 months to figure out.
Yeah, I saw recently. We'll see if it's kind of bears to pass, but one of the leaders in the administration and the Treasury team basically said they thought it would be ultimately the crypto and stablecoins will be the largest holder of U.S. Treasuries in the long run, which is a kind of wild statement to hear from the administration. But it does seem that it's not mutually exclusive, the idea that you're embracing crypto industry and you're embracing Bitcoin, and then you also believe, in continuing to export U.S. dollar dominance as the reserve currency, right? Like that's a highly nuanced view, but that seems to be the view that some of the policymakers that are the sponsors behind the Genius Act are taking.
It would not be the first time that policymakers in this administration had held two contradictory positions.
I think it's like a wait and see, right? Because yeah. I can see all of that happening, right? It's just, and we may not know whether or not they're right for 5 or 10 years in reality. These things take time. And there's a tremendous amount of U.S. Treasuries out there. So we'll see how quickly the adoption occurs, and to what extent. But I really think it's a wait and see. But I think there are very few drawbacks on it. It's really more of how widespread the adoption actually is.
Well, I think maybe one thing on that, just because a lot of this stuff, as you're pointing out, takes time to kind of make it through the halls of DC. On the other hand, again, love it or hate it, you have EOs that happen, at the beginning of the year. You have stuff that's kind of being pushed through Congress, imminently. And then you also have, I think the regulatory agencies that are changing policy, internal policy. And so is it really a year's thing, or is there kind of a rush to the market? Because, a lot of our my colleagues tend to believe that this stuff actually kind of the Overton window shifted, the chasm is being crossed as we speak, and there actually will be a slowly all at once kind of moment that's coming together. Like, how do you view that? Because you see the practical sausage making that happens in between an EO and a policy change, and then something that gets passed into law, and then like, what does that actually mean, for an industry?
So I don't necessarily think it happens all at once. I do think, and we've seen this, right? It has become more bipartisan, and it's largely become more bipartisan because I think President Trump during his campaign actually showed that this was a winning political issue. And it's up there. Nobody has ever voted for somebody because they were anti-crypto. Right. But there were a lot of people who voted for President Trump because he was viewed as the pro-crypto candidate. So I think from a political perspective, it really is going to be bipartisan, right? There's different nuances and different ways that people can approach the regulatory regime over it. And, I think there are very few people operating crypto businesses who are like, hey, we should have zero regulation whatsoever. Right. But I do just think that the place we're getting to, and I think when we get there is probably, during this administration. But, I think like most everything, it's going to just take time to build up. The US's financial system was the work product of decades upon decades of lessons learned, prior to establishing dominance. And, there's a lot of geopolitical events that happened to make that dominant. And, I think what we'll see is, there are going to be different economic events over the coming decades that can either accelerate adoption or, detract from it. And, we're going to have to see how it plays out. But I think the industry itself is just well positioned, largely with the regulators and with policymakers, to be viewed as really a partner in helping the country advance its goals, which I think is really one of the most important things you can do.
It might be one of the largest voting blocks in the US. Like, I think that was one of the surprises for people is, it crosses aisles, it crosses colors, because it, has a philosophical underpinning and an economic underpinning. So, I think I've seen some stats that it's one of the largest voting blocks, that is somewhat bipartisan. And so, you described that the grand, experiment of the U.S. government and the financial system, has many years of history around it. How do you expect, if anything, government services themselves to evolve kind of with this large voting block and this policy change? Because, I think as we've heard through Doge and other, efforts, a lot of the financial infrastructure itself that the government uses is sitting on 1970s mainframes. And so we've been talking a lot about more like, the asset side of Bitcoin and digital assets, but there's the utility side where I spend my day job. What do you expect the government services, whether it's through tax revenue or for infrastructure or for money movement, is there anything that's going to transform kind of the internal operations of the government, do you see?
Right. When a state gets a strategic Bitcoin reserve, what they're saying is, hey, if you have solutions for the government, we're open to it because we're pro crypto. And I do think that is probably a strong message on that. Yes, it's about the asset value, but it's largely sending a message that we're open to adoption of different services that, innovators are creating. So, I think the regulatory certainty that exists now probably helps people to, and, I think there's maybe a few people out there who are creating different types of ways government can utilize their services. And Megan, you're probably familiar with quite a few of them. I think what we're going to see is a probably quicker adoption of these types of services. And I think about El Salvador, right? You raised it earlier. When there's a lack of infrastructure and, in our case, being built on 1970s mainframe, the ability to go adopt a completely new system is a whole lot easier than getting it up to speed today. And I think what you're going to see is probably some municipalities who start to adopt these things first. I think that's probably going to require some state level of freeing up of regulations, right? And I think that is probably part of the reason why we're on 1970s mainframes, and not only at the U.S. federal government, but really across many states and municipalities. But I do think that a lot of the experimentation on government services as it relates to blockchain is going to be completely very early on state and local.
Yeah. Yeah, there are municipalities that I think are now taking tax revenue in Bitcoin. So
I think I want to say it was Seattle. You can, I think, pay for your taxes in crypto.
Yeah, or my parking tickets or whatever. Jeez.
Yeah, parking tickets
too. So we start and end the episode with law breaking.
Yeah. Which is definitely what you want to bring the policy expert on. So like Andrew's never coming back. He's supposed to be the one translating all of like the Bitcoin and crypto to like good state actors and people in the government. And here we are.
Well, it's been a wonderful conversation about illicit activity, and hopefully a path forward to less of that going forward in this country at both the federal and the state level. Andrew Johnson from Centerpoint 360, thank you so much for chatting with us. Where can folks find you or learn more about the policy work that you're doing and how it's evolving?
Yeah, thank you guys so much for having me. This was my first podcast, so it's been a blast, and glad I got to spend it with you guys. I'm on LinkedIn, so they can find me there, and I assume you can probably link to that in the show notes. So if you have any questions, what's going on, state and local level, and we're obviously tracking the federal level as well as that relates to how states regulate and ways that they may react to different policies. So always happy to chat. Love talking with people about policy at any time. So find me there, shoot me a message, and I'll look forward to catching up with some of the listeners of the show.
Awesome. Andrew, we have been so thrilled to have you, man. And
you're a natural.
He is great. He's natural. First podcast, but of many. And if you want to know any of the stuff, I highly suggest you go and reach out to him or Centerpoint. And for those of you guys who are listeners, keep liking the episode. That helps all of us. Spread the word, spread the love, and subscribe. And we will catch you on the next episode of Redefined. Thanks, Megan. Thanks, Andrew. We'll talk to you guys soon. Cheers, guys.